Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today we're diving into the responsibilities of principal brokers in Ontario, as highlighted by the Financial Services Regulatory Authority of Ontario, or FSRA. Steve, what's the main takeaway here?
Well, Janine, the emphasis is on principal brokers taking full responsibility for the conduct and compliance of their agents. FSRA's Antoinette Long pointed out that this has been a key focus for them, especially when it comes to the hiring process. They're urging brokers to be thorough in their due diligence and background checks.
That's right, Steve. It's not just about looking at the numbers or a strong track record on paper. Leung stresses the importance of understanding the candidate's experience, qualifications, and compliance history. This isn't just to protect the brokerage, but also to ensure consumer protection.
Exactly, Janine. And it's interesting that FSRA suggests contacting the candidate's previous principal broker to gather more insights. This is an area where some firms reportedly fall short, and it could be crucial in assessing potential risks.
I think it's a great point, Steve. Knowing about any past compliance issues can really help tailor how new hires are trained and supervised. It's about being proactive rather than reactive when it comes to consumer protection and the brokerage's reputation.
Definitely, Janine. FSRA also highlights the importance of having a robust compliance and oversight structure. This is particularly vital if a consumer complaint or lawsuit arises. Proper documentation of supervision can save brokers a lot of headaches down the line.
And let's not forget, FSRA is open to feedback from principal brokers about compliance issues. They're inviting suggestions for topics at their next conference. It's nice to see that they're encouraging a dialogue with the industry to improve standards.
Indeed, Janine. It's all about creating an environment where both the brokers and the consumers feel secure. With the right checks and balances, the mortgage industry can continue to thrive while ensuring the highest standards of conduct. Let's talk about the dramatic drop in Toronto condo sales, Janine. The Canada Mortgage and Housing Corporation, or CMHC, has reported a staggering 75% decline in sales from 2022 to the first quarter of 2025. This is quite alarming for investors.
It really is, Steve. The sharp decrease is primarily due to higher interest rates, which have significantly reduced affordability for homebuyers and diminished returns for investors. It's a tough situation for those who invested during the boom.
Absolutely, Janine. The CMHC report highlights that these high interest rates increase carrying costs. When you combine that with stagnant price growth, investors find it challenging to build equity, leading to potential losses.
And there's also the issue of uncertainty around tariffs, which has further throttled demand. Many investors are now facing scenarios where their units are worth less at completion than when they were pre-purchased, making financing more difficult.
That's right. CMHC noted that investors in Toronto faced up to a 6% capital loss just in the pre-construction phase by the end of 2024. That's a significant hit and not something investors were expecting when they entered the market a few years ago.
It's a reminder of how quickly market dynamics can change. The report also mentions that the Toronto market's pre-construction inventory was 14% higher in the first quarter of 2025 compared to 2022. At the current pace, it would take almost 6 years to sell all that inventory.
Yes, and this surplus of inventory is contributing to lower resale prices. The report shows a 13.4% drop in Toronto and a 2.7% decline in Vancouver. Investors who banked on double-digit price growth are now seeing a downward trend.
Plus, the rental market isn't offering much relief either. Carrying costs have increased significantly, up 24% in Toronto and 29% in Vancouver, while rents have only grown by 15% and 12% respectively.
And with builders canceling projects due to insufficient pre-sales, the housing supply issue could worsen. CMHC estimates that Canada needs to build about 3.5 million additional units by 2030 to bridge the housing affordability gap.
It's a complex and challenging situation for everyone involved. While the market is tough right now, it's crucial for investors to stay informed and adapt to these rapidly changing conditions.
Let's shift our focus to the Southwestern Ontario housing market, which is now firmly in buyers' territory. At the recent Southwestern Ontario Real Estate Forum, Desjardins economist Carrie Norman shared some insights on this trend, highlighting the falling demand and rising supply that are creating favorable conditions for buyers.
It's definitely a significant shift, Steve. After a period of balanced market conditions, the dynamics have changed. Norman pointed out that the trade tensions between Canada and the United States have contributed to dampened consumer confidence, which, combined with an increase in listings, is tipping the scales in favor of buyers.
Exactly, Janine. With the sales to new listings ratio dropping below 40%, buyers now have more choice and negotiating power. This is typically when we see prices start to decrease, offering a potential advantage to those looking to enter the market.
But for first-time buyers, it's not all smooth sailing. Norman cautioned that even with a buyer's market, affordability remains a challenge. Home prices have increased much faster than wages, making it difficult for young adults to save for a down payment while dealing with high rent inflation.
That's a crucial point, Janine. Even though the average resale price in the London area was $656,432 in May, mortgage payments can still take up more than 30% of the average income in Southwestern Ontario. This underscores the ongoing affordability issues, despite the market shift.
And it's important to note that no single-family home or detached home is considered affordable in any major centers in Southwestern Ontario. Even townhouses and condos are out of reach for many. We're not seeing a return to pre-pandemic affordability levels anytime soon.
Norman also mentioned that Canada is likely heading into a mild recession in 2025, which could slow down any economic or housing recovery. RBC economist Robert Hogue echoed this sentiment, suggesting that while some markets are showing signs of revival, a full rebound could take time.
It's a complex landscape for buyers, Steve. While the market conditions might seem favorable, the broader economic and labor market challenges can't be ignored. It's essential for buyers to stay informed and consider these factors when making decisions.
Let's delve into the recent trends in Canadian mortgage debt, Janine. According to the Bank of Montreal, the household mortgage debt service ratio in Canada has slightly decreased to 7.9% in the first quarter of 2025, down from over 8% in mid-2023. This indicates a minor relief in the mortgage debt scene.
That's interesting, Steve. While this decrease might seem like good news, Canadians are still facing higher interest expenses and slower principal repayments. The interest portion of mortgage payments has surpassed 5%, which is a level we haven't seen since the pre-financial crisis peaks.
Yes, Janine. The era of ultra-low interest rates that helped accelerate principal paydown has ended, and this is affecting equity growth. Investors who relied on growing equity to offset negative cash flow are now facing significant challenges.
It's a tough situation for many homeowners and investors. The rising interest rates are curbing the cash flow benefits that investors once enjoyed, and this is causing hesitancy in entering the housing market. Stagnant cash flow dynamics are clouding potential returns.
This shift from low to neutral interest rates is indeed creating a new era of managed expectations, Janine. Both investors and homeowners need to recalibrate their strategies. Without the rapid equity gains we have seen in the past, careful cash flow management is crucial.
Absolutely, Steve. This new financial environment requires a lot more planning and foresight. It's not just about the numbers anymore. It's about being strategic in how you manage your finances amidst these challenges.
And looking at the bigger picture, Future market activity will heavily depend on how these challenges are addressed. It's a time for investors and homeowners to adapt and find ways to navigate this new landscape.
Steve, the Canada Mortgage and Housing Corporation, or CMHC, is set to release new estimates on housing supply shortages across Canada. This release is highly anticipated as it will provide updated insights into the current state of housing availability, which has been a pressing issue nationwide. What can we expect from this new data?
Well, Janine, this report is crucial given the ongoing concerns about housing affordability and availability. CMHC's estimates will likely highlight the gaps in housing supply that need to be addressed to meet the growing demand. With many cities experiencing rapid population growth, the pressure on housing markets has been immense.
That's true, Steve. The lack of adequate housing supply has been a significant factor driving up home prices, making it challenging for many Canadians to find affordable housing. It's a complex issue that requires not just an increase in supply, but also strategic planning to ensure that the housing needs of different communities are met.
Absolutely, Janine. And it's not just about building more homes, but also about making sure they're in the right locations and priced affordably for the average Canadian. The CMHC's new estimates will likely provide a roadmap for policymakers and developers to address these shortages strategically.
Yes, and let's not forget the role of municipal governments in this. They play a vital part in zoning and approving new developments, which can significantly impact how quickly new housing can be brought to market. Collaboration between different levels of government and the private sector is essential to effectively tackle these shortages.
That's a great point, Janine. The CMHC report will likely emphasize the need for a coordinated approach to housing supply. By aligning efforts across various stakeholders, we can work towards a more sustainable and equitable housing market in Canada.
I'm hopeful that these new estimates will spark meaningful conversations and actions. It's crucial for us as a nation to address these shortages head-on and ensure that everyone has access to safe, affordable housing. The stakes are high, but with the right strategies, we can make significant progress.
Our final topic today revolves around the recent report from the Canada Mortgage and Housing Corporation, or CMHC, which highlights unemployment as the most common cause of late mortgage payments. This is a significant finding that aligns with broader economic trends we've been observing.
Absolutely, Steve. The report indicates that many Canadians are facing financial hardship due to job losses, which directly impacts their ability to keep up with mortgage payments. It's a stark reminder of the interconnectedness of employment stability and housing security.
The data shows that unemployment has been a driving factor behind late payments, accounting for a substantial portion of the cases. This isn't entirely surprising given the economic fluctuations we've experienced lately, but it's certainly concerning for the housing market.
It is concerning, Steve. The CMHC report highlights that for many households, a sudden loss of income can quickly lead to financial instability. This is particularly true for those who are already stretched thin with high debt levels and limited savings.
The report also points out that while unemployment is the most common cause, there are other contributing factors like unexpected medical expenses or major life changes. These can compound the financial stress on homeowners, leading to delayed payments.
Yes, and it's important to remember that these challenges are not just numbers on a page. They represent real people and families who are struggling to maintain their homes during difficult times. The human element is crucial in understanding the full impact of these findings.
From a broader perspective, this report underscores the importance of having a robust safety net for homeowners. Policymakers and financial institutions need to consider ways to support those who are at risk of falling behind on their payments due to unforeseen circumstances.
I agree, Steve. It's about creating a system where people aren't left vulnerable when faced with unexpected challenges. Providing resources and support can make a significant difference in helping families stay in their homes and maintain financial stability.
As we wrap up today's episode, it's clear that the housing market is closely tied to broader economic factors. Staying informed and prepared is key for both homeowners and investors. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.